Take profit orders are a powerful tool for locking in gains and managing trades with precision. This video will break down how they work, the different types of take profit orders, and how to place one on dYdX. So first of all, what is a take profit order? A take profit order lets traders set a predefined price level to exit a trade, automatically securing profits when the market hits that target. For example, if a trader is long, they might place a take profit order above the current market price to lock in gains if the price rises. Once that price is reached, the order becomes active and is executed. If a trader was shorting the market, they'd place a take profit order below the current price to secure profit if the market drops to that price level. It's also common to use both a take profit and a stop loss on the same open position. Take this open long position as an example. A trader might set a stop loss below the entry price to limit downside risk, and a take profit order above the entry to automatically secure gains if the market moves in their favor. If you want a full rundown on stop loss orders, you can check out the video linked below. On dYdX, there are two types of take profit orders: take profit market orders and take profit limit orders. A take profit market order executes immediately at the best available price once the trigger is hit. This prioritizes speed and ensures the position is closed quickly, but in fast moving markets, it may result in some slippage. A take profit limit order, on the other hand, will only execute within a specific price range. This gives more control over the execution price, but if the market moves outside of that range, the order might not fill or only fill partially. So let's walk through how to set a take profit order on dYdX. For the purpose of this video, this example will run through setting a take profit market order. You can see here that there is already an open position on Bitcoin, and as it is a long position, the take profit order will be set higher than the entry price. So to do this, click on this edit button here on the open position, and in this pop-up window there are two ways to set a take profit trigger. The first is simply by entering the specific price of the asset that you wish to exit the trade at, or alternatively you can select a target percentage gain on the position. Both fields are synced and will update accordingly. A stop loss can also be added from this same window, and this allows traders to close the position automatically if the market moves against it, helping limit any further potential downside. So once these fields have been reviewed, go ahead and hit Add Triggers, and as they are yet to fill, both will appear here under this Open Orders tab. To cancel any of these orders, simply click on this X, which will immediately cancel the order. So the key takeaways on take profit orders are that they can be set as a market or limit order. They help secure profits by automatically closing a position at a predefined price target. They allow traders to lock in profits without needing to monitor the market constantly, and they're commonly used alongside stop orders for more complete trade management. To start placing take profit orders or explore more of dYdX's trading features, visit dYdX.trade.